Welcome to the Innovation Imperative, a legal podcast for startups, founders, and venture capital investors navigating the legal issues that shape emerging companies. In each episode, we share practical, business-minded legal insights to help you close deals, manage risk, and stay ahead as your business evolves. Welcome, everyone, and thanks for tuning in to the Innovation Imperative. My name is Patrick Driscoll, and I'm the Director of Client Development for Emerging Companies and Venture Capital at Holland & Knight, where we work closely with founders, VC firms, and investors navigating the full life cycle of innovation, from company formation and early fundraising through growth, scaling, and ultimately that exit. A big part of our work sits at the intersection of law, capital, and strategy, helping innovators and investors think clearly about how they build, fund, and protect durable businesses. The Innovation Imperative is really about that journey. Each episode, we sit down with founders, investors, and operators who are shaping the innovation economy, oftentimes behind the scenes, to unpack the real stories, lessons learned, and inflection points that don't always show up in pitch decks or press releases. We focus on VC, early stage companies, and the decisions that matter most when the stakes are high. I'm absolutely stoked by our guests today. This episode focuses on building climate companies, specifically what it takes to decarbonize global shipping, and the realities of scaling in sectors defined by long sales cycles, regulatory complexity, capital intensity, and real-world infrastructure constraints. Joining me first is my colleague, Tim Poydenis, who is a partner at Holland & Knight and the co-head of our emerging companies and venture capital team. He's going to go ahead and lead today's interview. Tim works closely with founders and investors navigating growth and strategic transactions, and he brings a practical, execution-focused perspective to building companies in complex industries. And we are absolutely thrilled to be joined by our special guest, Chase Dwyer, the founder and CEO of CarbonRidge. Chase is building in one of the most challenging sectors for startups, focused on decarbonizing shipping, and he brings firsthand experience navigating slow-moving markets, operational complexity, and the importance of aligning with the right investors and strategic partners along the way. So with that, Tim, let's go ahead and get started.
Super excited to be here again and couldn't be more excited to have Chase join us as a guest. I've had the pleasure of knowing Chase personally and working with him for, at this point now, over half a decade, I believe. So excited to sit down and formalize things a little bit with the podcast interview. Chase, thanks for joining us. I think it'd just be helpful for folks to sort of hear your path and sort of how you got to where you are today with Carbon Ridge and everything else.
Yeah. Thanks, Patrick. Thanks, Tim. Happy to be on. So I was born and raised in Vermont, grew up ski racing about 30 minutes south of the Canadian border. And I didn't really understand what the whole deal was with climate change until I got to college. I think that it was branded badly when we were in high school, global warming or however it was done. But I took a rhetoric class where our professor made us read Silent Spring and a bunch of these environmental books. And I suddenly realized that this thing I cared so much about, ski racing and generally skiing the planet, was kind of a fleeting reality. And when I have kids or grandkids, and that might not be a possibility in a lot of places. And I think that kind of shocked my system to go and focus the next foreseeable part of my career on trying to address that issue. But more broadly, I saw it as a really massive opportunity in the energy system space. And so I started my career working in tax equity around financing wind, solar, battery storage projects. I worked on battery storage development in California. It was around the time I met Tim. And then I got introduced to the shipping industry by a family friend. I knew nothing about shipping, and he started telling me about the industry. And he said, I'll never forget it. He said, Chase, the thing you need to understand about shipping is that we're like the incinerator for the global hydrocarbon business. You have a barrel of oil, and at the bottom, you have this heavy sludge material that always ends up. It's called residual fuel oil. We used to burn it back in the 50s for home heating before the discovery of natural gas. And now ships burn it, and they're the only demand for it in the world. And so if ships don't burn it, there's basically nobody that's going to consume this product as long as barrels of oil exist. So when in the context of maritime fuel emissions reduction, you need to think of it as they literally burn a waste product today. So anything you're comparing to has to be able to be close to parity with that. And I think that was the framing for me to understand that this emissions problem is so massive and so challenging in maritime, but the maritime industry is actually this very heavily regulated space that has a precedent of adopting these very stringent emission regulations related to sulfur, ballast water regulations, NOx, and now CO2. And so there is this kind of perfect nexus between not a lot of solutions that are a good fit and a regulatory environment that was demanding solutions be there to kind of fit this need. And so that was really the catalyst to get into shipping and figure out, okay, what's the best way to decarbonize this industry?
Wow, that's pretty cool. I didn't know you were quite a skier too. That's a pretty cool story and background how you got into it. In terms of Carbon Ridge, your company now specifically, if you're just trying to explain it in layman's terms to some dude you meet at a coffee shop, like what is Carbon Ridge?
Yeah. We basically build essentially modular boxes that go on ships and attach to the funnels of the ship. And we pull the flue gas, redirect the flue gas out of the ship. And inside that flue gas, you have a little bit of CO2, a little bit of sulfur, and a little bit of NOx that creates in total 1 billion tons of emissions per year. And we use essentially like a sponge in our tank-like device basically inside that box that removes and kind of captures the CO2 and lets the exhaust go back out clean with up to 95% of the CO2 reduced and 99% of the sulfur and the NOx reduced. So it's kind of like a catalytic converter for a car, basically. Cars emit a lot of NOx, and they invented a catalytic converter that basically removes the NOx in a catalytic fashion. We do basically the same thing on ships.
Wow, that's pretty wild. My second question, building sort of the company, like what was that aha moment that founders have where it's like, hey, this thing actually could have legs. This thing is something that we need to jump in on.
Yeah, there's two things. So the first is that there's basically three ways to reduce emissions in maritime, like on a fundamental level. The first is that you can consume less fuel, which emits less CO2. So you can install wind rotors, you can make your propeller more efficient, you can have a more aerodynamic bow. But those things cap out at 10, 15, 20% emissions reduction overall for a ship. Then on the other end, you could try to burn a different type of fuel, but all those fuels are incredibly expensive. They don't really exist today, and there's not really a pathway for them to exist. And a lot of the traction there is kind of faded. And then basically in the middle, you have what we do, which is essentially taking the emissions itself and abating the emissions directly from the ship and letting the ship burn the exact same fuel and operate in the same way, just basically removing the product itself from the exhaust stack. And so that's kind of the fundamental layout. And the catalyst for me was that I realized that the energy saving devices capped out at a certain amount, and the alternative fuels had issues with energy density, were too expensive, and really had a lot of different hurdles to get towards development and required the vessels to totally change the way they operated. It required new ships. You can't really retrofit them. So you have 50,000 ships today that, 90% of them, 75% of them at least, all need some sort of solution for this. So that was the catalyst. And then the second piece of it was that the traditional carbon capture technology that's used on land, if you've ever passed by a refinery in Texas, for instance, and see the giant columns that are in the refineries, that's what you use for these gas separation processes. And so on a ship, you would need to install these massive columns to the ship to do the carbon capture process. We looked at shipping and said, this is kind of like floating real estate. It's like you're trying to lease out as much space as possible and consume as little energy and use up as much space. And what we started to find is we needed to find a way to capture the CO2 that was more modular, took up less space, and more energy efficient. And we realized that you can use centrifuges to do that work. And basically, just describe it, because we'll get to the technology pieces. The way the centrifuges work is that the traditional columns are a passive process. So basically, the gas and the solvent meet passively. The centrifuges basically intensify the process. So we essentially rotate the process at 400 RPMs, and it basically allows us to do much more work in much less space, making them modular and they're much more energy efficient.
And then just to like visualize it for myself, like when you're talking about ships, are you talking about like the cargo ship that I see out in the Pacific? Or are you talking about something much more intense, or is it run the gamut?
I mean, it's pretty wide spectrum. It's, your cargo ship that's operating from LA to Shanghai. It's your tanker vessel that's right now having issues in the Strait of Hormuz. It's large coastal ferries that are too big for batteries, offshore supply vessels, etc. So the technology, because it's relatively small and modular and relatively energy efficient, there's a lot of different applications. Generally, though, the bigger the vessel, the better the unit economics for us.
Speaking of economics, this definitely doesn't seem like a company and a technology that you can build without capital. So, as most founders know, and repeat entrepreneurs and first time entrepreneurs know, like you got to raise funds somehow. What was your strategy and what was your thought process on finding the right amount of capital, but I think more importantly, the right investors for the company?
Yeah, I mean, I think with these, I guess, hard tech companies generally in energy, all of them take a decent amount of capital to be able to get to speed. And so we knew that that was going to be the case. And we also knew, based on kind of what we quickly understood, that shipping is a slow inertia business until it's not. And so generally what happens in shipping is that there's this very incremental creep. And then all of a sudden, there's this massive catalyst point where it just starts to go in a hockey curve. And so we knew that basically the business needs the right amount of capital to get to that hockey stick moment, right? Until it can, very quickly move through profitability. And so a large portion of where we found that capital is a lot in family offices that are working in the energy space that are really kind of dedicated to this overall understanding that the world is on this slow path to decarbonize and it needs to be kind of a diverse perspective of how we look at that. And then it's a lot of, owners and operators in the shipping space that want the technologies to be there to reduce emissions on their vessels, but then also want priority for when the technologies are there. And so they're making investments to ensure that those technologies exist and that they have access at the end of the day.
Yeah, that's an interesting one. So I think that you sort of took my next question, but I'll ask it anyways. My question was going to be, when you're raising capital in this industry, what attributes should you look for in an investor? Two that stick out right now are ones that are interested in it and the efficiency of it just for the ecosystem. And I think that the second piece is ones that sort of want to be in the queue to be the first potential users when it's ready.
Yeah. I mean, I think what I generally say is that because these businesses take a longer time than a lot of software businesses, it means that you're building through different cycles, just more across the board always. You end up seeing different cycles, which means that you have different cycles from a capital markets perspective, where the venture investors are thinking, what the regulatory environment looks like within the market that you're building in, that dictate what investors want to be doing what thing during a different period. And so we're always looking at, when we look at investors, the question is, are you investing in this company because of the long-term opportunity of what we're saying this is going to be at the end of the day, or just because this is what is hot in the current moment? And candidly, we're looking obviously for the former because the business needs existing investors and new investors that really understand that what we're building for is thousands of ships that need to be retrofitted and built with this new systems as we move into the later part of this decade and into the next. And it's a kind of scatterplot road as we get there, full of different parts of the journey, but we're very confident in the end outcome there at the end of the day. So we're really looking for investors that share the same overall vision in how this is going to be built.
Yeah, I think that's a great point. And I think it's something that we probably had this conversation 5 or 6 years ago. It runs across every industry. And the phrase that I always use when I'm talking to founders about fundraising is, not all money is created equal, right? For every company, for every business, for every industry, for every stage, like not every investor is right. So 5 million bucks from investor A could be wildly more valuable than 5 million bucks from investor B. And so it's interesting to hear that level of granularity in your industry and with Carbon Ridge. In terms of like moving on a little bit into now just like the business and like the legal and regulatory landscape, how important is that for you all? It sounds to be sort of at the core of what you're doing. And how do you think about that as the CEO of a business like this, of trying to prepare yourself and engage with the right folks to make sure that you have the data points you need?
Yeah, I mean, it's very critical overall, mostly from a directionality perspective for the shipping industry. Most of the way that shipping itself as an industry work is basically they have these ships and they have to comply with hundreds of different regulations, and that's the way that they run their business essentially. So this is just one of the different regulations that's in there. And so the regulatory framework is quite key. Now, what's interesting for us is that there's other verticals where we're able to generate commercial value for these owners. For instance, there's a growing CO2 shortage that's happening in the US right now, especially in pockets in the Northeast and the Northwest. And so we're working with partners now to basically fill that gap from vessels actually that are trading into those regions. And the economics actually provide capital recovery for the owners in deploying the systems. And now they have an asset that can be fully decarbonized and also kind of provide this economic value. So we're looking at it from a multifaceted perspective, but at the end of the day, the question really is, how can we provide for ship owners? Their key thing is flexibility at the end of the day for these assets. And so what we look at is, how can we provide absolute amount of flexibility for them, whether it's reducing their regulatory penalties, it's allowing them optionality for what fuel they can burn in the future and having our system that can take any type of fuel, right? And so I think that that's really kind of how we think about building the business from there. And I think the last thing is that from a legal perspective, you can make sure that the regulatory framework or try your best includes the solutions and the framework that fits best, but you can't dictate what happens with politics, right? And so you build up the right partners and build up the right ecosystem around you to be able to deploy and grow and continue operating through the phases where there's inevitable waiting periods and ambiguity of what's going to happen.
Yeah. And if you had to say, as an operator navigating this landscape, what's been the most challenging aspect of the industry for you and the company in learning to navigate?
It's funny. I'd say the most challenging aspect is the most enjoyable and rewarding aspect. And it's that the inertia with the shipping industry, it's a very much people's industry, right? It's building trust. It's building this, relationship to where the owner is saying, I have 100 to 500 ships in my fleet that I'm going to trust you with to solve this issue for me. And therefore, I'm going to take a while to understand if you're the right partner. They're making a big investment. And so it's an element of trying to make sure that this is the right return on value. But I think that the benefit of that at the end of the day is that once you build these relationships, they're incredibly sticky, right? And so they chose one vendor for their sulfur scrubber, and then they went and deployed 120 systems with them over 3 years. That's the dynamic. And the reason why I say it's the best and the worst is that the Silicon Valley model, like that breaks that model, right? The Silicon Valley model does not like 12, 16-month customer acquisition cycles. And so I think that that's the element in terms of when you think about fundraising and you think about investors, it's understanding that like there's a certain type of capital, right, that's going to bring you through those components and knowing that this is how this is really going to play out at the end of the day.
Yeah. No, it's interesting here. I mean, it has definitely got to be rewarding when you get something that sticks for sure. And I can only imagine that it can be very frustrating, particularly if you go down a road for several months and you sort of come up empty handed. For the founders that are listening, if you had any sort of pro tips on best ways to like really solidify those relationships that you're trying to build in the industry, what are some sort of tips that you could pass along to folks?
I mean, I think the biggest two I'd say there's three probably. The first is always, it's cliche, but it always comes back to team. And you have to build a team that is more or less just devoted to the mission in general. Because if that's the case, then it is quite remarkable of what can be accomplished as long as people are fully on board with what you're trying to do. So it comes with like, are you doing something that's impactful? Are the people you're working with trying to make the same impact? I think that's incredibly important, although it sounds cliche. I think the second piece is that when it comes to building, speed and velocity is just so critical. Although we work in a slow moving industry, we're always focused on what are the ways that we can make like incremental progress and be iterative in this to be able to get an LOI or a piece of our product or an R&D element faster and more iterative. And I think you're seeing this right now with this immersion of hard tech generally. But speed is so important because it allows you to iterate, it allows you to like test things out and kind of like actively see, okay, is this going to work, and kind of go and iterate on it. So I think like a focus on speed and execution just has to be there with any hard tech company that you're building. And I think generally any company. And then the last thing is that when it comes to investors, we now ask investors that we talk with, what's your track record investing in existing companies or other companies when the market has been in a worse place than it was when you originally invested, right? But you believe in the
Yeah.
idea. Because a lot of investors say, and I've heard this from peers, heard this myself of, oh, well, we totally believe in the idea, but it's hard to write checks when something isn't going exactly as planned, but it'll turn around in 2 years and it'll be better. And so I think generally it's finding the partners that are going to kind of be there through the thick and thin per se, as long as the company kind of continues to execute and we make it through. So I think that that's the really big three components we'd say there is. Two of them are basically finding the right people, and the third is moving as quickly as possible and iterating.
Think that's the life of a founder, is like knowing that nothing will ever go as planned. If you think it will, it's probably the wrong career path. In
Yeah.
terms of career paths, I want to circle back a little bit to the beginning of the conversation now that we have some more information about you. Were you always an entrepreneur? Leaving school, going doing banking, it doesn't seem like you may have always wanted to be a founder. Maybe you did. And I ask that just because I have a lot of folks that I talk to that are just like, yeah, you know what? Like, I wish that I would have done X, Y, or Z, but I became an attorney or started working at an investment bank instead. So, what was your thought process and how you navigated that?
Yeah, I mean, I liked elements of working in finance, working in renewable energy for the people. The challenge, admittedly, at the end of the day for me was that I was incredibly bad at having ideas and not having those ideas be seriously taken and executed on, I guess, is the way to put it. And so I essentially said, at some point, I want to have the autonomy basically to say, we think that these are good things to do and we're going to go and execute on them, as long as people believe in us, essentially. And so I think I was maybe like a bad employee and, taking my own risk as long as those support us, which is kind of the catalyst for it. And honestly, I think that that remains probably today. But yeah, I mean, look, I went to Babson College, which is like, the school focused on entrepreneurship. And I actually didn't think that I was going to go into entrepreneurship coming out of it. But I think entrepreneurship has this, addicting element to it, right? Like you're in control of your own destiny is the thing at the end of the day.
Yeah.
And I think it ultimately is up to you and the team that you build and all the people around you to make it happen. And you're not necessarily subject to what did the other 10,000 people in this organization do that affects what I'm doing on a daily basis. So I think that's what's most exciting about it. And generally, I think it's the place where you can make the most impact in whatever you care about, whatever impact means to you, because that autonomy to do so.
No, and I think that's something that in the last point, I think that's something that I've enjoyed the most about working with you over the years is like getting to be alongside, honestly, for the ride of a company that's trying to make a true impact. And I think it's nothing against other clients or other companies, but I think that when you have something that could have a very tangible impact on the lives of many, it's pretty cool, just to be honest. And to circle on to one of the things you mentioned about building the right team around you and for the speed that's needed in the industry. How do you go about that? How do you like make sure that you have the right folks like at the core level, whether it's folks on the employee team or in the boardroom or on the cap table?
Yeah, it's a good question. I think the first piece comes down to identifying first what is really required and what are the skill sets or the type of people that are needed. And I would say from there, once that's done, I would be remiss to say, you can only do it via references or via recruiters, et cetera, because we've hired people directly off LinkedIn who are absolute superstars. We use recruiters and we've hired a lot of people who have been friends or
Yeah.
I wouldn't prescribe anything along those lines. I would more just say that, being really thoughtful about what is the fit in the role that really needs to be hired here? What different functionalities can they play? What might that person be able to do in the future if like the business or the functionality needs to change to ensure that they can kind of adapt? And then just keeping your eye out essentially, right? Like for that right fit and the right person. And sometimes you don't have the luxury. You have to hire fast and figure it out, but that's typically where it's worked out for us. And I think we've been able to build a really great and motivated team.
Now to ask the impossible question, particularly for an industry that is ever changing at every drop of a hat, it seems like in seismic directions. Like looking at your magic eight ball, thinking down the road in 3 years to 5 years, what does success look like for Carbon Ridge in 3 years or 5 years?
Well, I mean, I think the reality what success looks like is you happen to be driving across a bridge close to a port or a terminal and you see a big white box on it on the back of a ship with a big Carbon Ridge logo. And somebody attorney or, friend or something like that sends a photo of it and that means that, you've hit a pretty good adoption curve. But I think more realistically, I think it's that we're now in the commercialization phase of our technology. We've proven it works on a ship. We've proven the technical component. We're now scaling it with different owners. And so really the next couple of years is building larger systems, showing exactly what the unit economics look like and kind of proving out the overall model and then really moving into scale. I think the last thing I'd say also is that we say we only do maritime. That's our niche and our thing. But there's a lot of interesting synergistic elements about what we do in some other applications that are in maritime where we're focused on the technology and that will accelerate the adoption of our core technology and the validation of it as well. So there's a lot of interesting things I think on the pipeline that we see here. But yeah, we're trying to, get a carbon rich system at every port near you.
That's awesome. No better answer. You had me sold at seeing the white Carbon Ridge box on the ship. That would be awesome. I appreciate it. It's been a ton of fun for me. I know we're coming up on time here, but really appreciate you taking some time out of your otherwise very busy life in building the company. So I'll flip it back over to Patrick.
Yeah, that was incredible. I know if I now see one of those white boxes, I'll take a photo and I'll email them off to you, Chase. So I'll keep my eyes peeled. For listeners of the show, they know that I like to give a little bit of my key takeaways, and there's 1,000 here. So I'm going to try my best to find the top five. The first one, which I think is interesting, is how you kind of took a look at the regulatory broader ecosystem and then identified market inefficiencies to find this is a prime opportunity. Really, you actually met the market where it was. So it's kind of a pragmatic, innovative solution versus creating something and then trying to find the solution later. So doing a lot of research and getting into the weeds there, into the sector made a ton of sense. The second one, which is not news to anyone in deep tech, is the slow sales cycles and then sudden scale. I think you mentioned the phrase that's often talked about in VC, the hockey stick. So once you hit a point in, it sounds like this is the case of Maritime, where there's enough adoption and people know who you are based on relationships and you've proven out the technology. And it's a sudden uptick in sales in the commercialization phase, and you're going to become ubiquitous, ideally, in the broader market, which is exciting. Using the hockey stick visual for this type of heavily regulated, slow moving market makes a ton of sense. Again, something that I like to tell founders all the time, not all capital is equal, especially in sectors that could be affected by things like political risk, which you kind of tapped into. So finding folks that really believe in the problem, understand the problem. You mentioned family offices, really aligned investors in kind of energy transition that aren't just going to duck out whenever things become a little bit more scary or risky. They're in it for the long haul, they'll ride the wave, etc. And then the final one that I'll mention, execution. So execution still matters. You talked a lot about building a mission-driven team that actually believes deeply in what you're building, prioritize speed and iteration. So even though it's a slow-moving industry with perhaps a very slow sales cycle, you still need to be quick and nimble. You got to be able to pivot and adapt. And you talked about like getting things like LOIs and pilots and traction signals, even while things might be a little bit slow. And I did want to double click on the team building strategy where you mentioned not only through kind of the warm referrals through your own little networks, but also like you never know, LinkedIn could have this amazing person that's going to come in and be an absolute rock star. So spread your net far and wide, and I think you might get the right people if they really believe at the end of the day in a solution that you're providing. Those are my key takeaways. And thanks again to Chase and to Tim. Special shout out to Chase. You took time out of your very busy founder life to be here. This has been the most recent episode of the Innovation Imperative. It was absolutely amazing to hear how Carbon Ridge is really tackling one of the toughest decarbonization challenges by meeting the market where it is and building practical and scalable solutions. If you've enjoyed the conversation, be sure to follow along for more discussions with founders and investors shaping the future of innovation. And we appreciate you listening. We'll see you next time. Thanks. Thanks for listening to the Innovation Imperative. At Holland & Knight, we partner with startups, founders, and investors to deliver practical, business-minded legal guidance, helping you move forward with clarity and confidence. To learn more, connect with our professionals from today's episode or visit hklaw.com.